Most investors think that the crash is the problem. It isn't. The problem was already there, invisible and waiting. No plan, no cash reserves, no protocol. And when prices finally collapsed, they had to make decisions emotionally. That's when portfolios got destroyed. Stay with me until the end of this video because I'm going to show you the exact three-part system I use so that when the next crash arrives, I already know what to do. No panic, no second-guessing myself, no watching financial television, hoping someone tells me what to do. And today I want to show you how I position for the next market drop. Because the next decline is coming. Not because I'm bearish, not because I can predict markets, because corrections are normal and that's what markets do. Always have been, always will be. And if you've been watching your portfolio a little too closely lately, this is for you. This is the long view. If you want retirement planning that takes emotions out of investing, hit subscribe. In this video, I'll show you the three-part system I now use during market declines. The structure, the reserves, and the automatic buying protocol that removes the need for courage entirely. For most of my 40s, I invested reactively. And here's the uncomfortable part I hate to admit. I didn't think I was reactive. I thought I was informed. I watched the news constantly, read articles every morning, checked markets throughout the day. And when markets rose, I felt great. But when markets dropped, my confidence also dropped with it. Every downturn felt dangerous. And because everything felt important, I was constantly adjusting my portfolio, tweaking allocations, watching predictions, waiting for clarity. But the unfortunate thing is that clarity never came. And then 2020 happened. I opened my portfolio every single morning, hoping that things would stabilize. But I had no real plan if they didn't. No buying levels, no reserve strategy, no defined response. I remember markets recovered rapidly. I stayed hesitant far too long, and I missed most of it. That experience changed everything because I realized the problem wasn't information. It was preparation. So I built a system instead. 3 buckets, 3 distinct jobs, 1 simple framework. Think of it like a ship's radio. You don't turn on the radio when you see an iceberg. You keep it on constantly so you're never caught unprepared. And that's exactly what this system does for me. Every dollar in your portfolio should know its assignment before volatility arrives. Bucket 1 is the foundation. This exists for stability. 6 months of living expenses plus a moderate gold allocation. And yes, gold is imperfect. It won't always rise during crashes. But historically, it has often held steadier during periods of panic. And psychologically, that matters more than people admit. Because when investors feel unsafe, they make desperate decisions. But when your foundation feels secure, you stop reacting. That's the real goal of this bucket. Permission to stay calm. Bucket 2 is what I call the engine. This is the growth layer. For me, it's VWRA because I'm Canadian and I'm living outside of Canada. But for you, if you're American, it would probably be VT. Global diversifications, thousands of companies, dozens of countries. I stopped trying to identify winning stocks. I simply own global productive businesses for the long term. And here's the surprising part about this bucket. It requires the least amount of attention. No predictions, no dramatic moves, no constant adjustments. It just simply compounds quietly while the world keeps on moving. Now for me, the most important bucket is called the opportunity reserve. This is the piece that most investors completely ignore. Because most investors stay completely invested at all times, which sounds rational in a bull market, but during sharp declines, they suddenly realize they have no buying power left. So here's what I do differently. Roughly 15% of my portfolio sits in T-bills, short-term US Treasury bills, liquid, stable, still earning a modest yield while waiting. And this isn't because I expect crashes constantly. It's because I value preparedness more than squeezing out every possible percentage point. Because calm has a value too. And when markets finally fall, this reserve becomes deployment capital. Here's where the system changes everything. I already have GTC orders placed on my global equity fund at -5%, -10%, -15%. If markets decline 5%, the first order executes automatically. 10%, another order fills. 15%, more capital deploys. No guessing, no debating, no watching financial television, hoping someone tells you what to do. Because the worst investing decisions happen during uncertainty. Panic selling during crashes. Aggressive buying during euphoria. My system already knows what to do. So when volatility arrives, my job changes completely. I don't need courage. I don't feel anxiety. I just feel calm. I just need discipline to leave the system alone. And honestly, that's much easier. Will this catch the exact market bottom? No, probably not. But that's not the objective. Trying to capture the perfect bottom usually creates hesitation. And hesitation becomes paralysis. I'd rather be approximately right with a calm system than emotionally exhausted searching for precision. Most investors think success comes from prediction, but long-term investing requires preparation instead. And here's the thing about market crashes. The crash itself rarely destroys people. It's the emotional instability the crash exposes. Fear, regret, urgency. That's why protocol matters. Protocols make decisions early, before emotions arrive. Foundation for stability, engine for long-term growth, opportunity reserve for volatility. 3 buckets, 1 calm framework. And when the next market correction arrives, I won't be asking what should I do, because the decision was already made months earlier. The radio was already on. If you're wondering where you actually stand heading into retirement, I built a Long View Retirement Checkup, a simple framework to help you evaluate your position clearly and honestly. Link is in the description. And if this kind of calm, long-term thinking is what you're looking for, please subscribe. New videos every week. That's the Long View.